Welcome to video 14C. I'm sure you're going to be happy for this video because it is the last one in Module 2. And wow, Module 2 is just chock full of concepts. A lot going on in Module 2. So if it makes you feel any better, there are only 2 chapters in Module 3. Those chapters tend to be technically kind of difficult, but at least there's less to chew on. So from that perspective, it might get easier. I don't know. I'm not sure students really feel that way. Okay, so here we are in 14C. We're doing our last item, using a home as a business. This is a home office deduction. This is one that if you do individual tax work, you get a lot of questions about. But technically, this is a business item. Okay, so we've managed to convert home cost from personal to business costs via rental. So the general rule for your dwelling is that no part of any cost of a personal dwelling can be deducted. But of course there are exceptions. One of those exceptions is the home office deduction. So to qualify for a home office deduction, a taxpayer must use his home or part of his home exclusively and regularly as either the principal place of business for any of the taxpayer's trade or business. So that would imply that your home is your principal place of business where most of the activity is conducted, or it's a place to meet with patients or clients in the normal course of business. So it can't be like, oh, well, occasionally I meet my clients there. No. In the normal course of business, this is where I meet clients. If you check the box on either of those, plus you use that part of the home exclusively, you can take a home office deduction, right? So this is a very narrow exception to the general rule that says you can't deduct any part of your personal home. Okay, so there is an exception because, of course, there's always an exception. And in this case, the exception is you may ignore the exclusive test if the part of the home that you're using is used for the storage of inventory or samples and there is no other office available. So this is common for folks who might be running like an Amazon.com business out of their garage, and so they're going to treat their garage as a home office because that's where they're storing all their inventory, and because it's just an Amazon.com business, it's not like there's some other office somewhere that they work out of. And so they can ignore the exclusive test. So what that means is they could use it as their garage as well. They can park their car in there if they want. They can, have a second fridge in there, whatever. So the use of inventory or samples is a nice expansion of the exclusion that applies. And the second one is in-home daycare. So if you operate an in-home daycare, you do not have to meet the exclusive test for all the parts of your house that you're using for that daycare. All right. So if you are self-employed, the home office deduction is a 4 AGI deduction that appears on Schedule C. It's actually the second to last line on Schedule C. And that's because it's limited to your business income before the deduction. So I know most of you aren't familiar with Schedule C, which is fine. But if you recall, we looked at this earlier in this module. At the top is the income, then a whole set of deductions, and then it has you calculate a tentative profit. That tentative profit serves as the limit for your home office deduction. Then you take your home office deduction and you get your actual net profits from that Schedule C business. If you're an employee, you're basically not permitted to deduct a home office any longer. That was considered a unreimbursed employee business expense, and as a result, it's gone because that miscellaneous itemized deduction is gone. And so having a home office as an employee is no longer available. Okay, so there are 2 methods for the home office deduction, the actual method and the simplified method, and we'll cover both. So the actual method, the reason that I always attach home office just after rental property is that the allocation works basically identical to that of the allocation of rental home costs. So first you identify what are direct costs, what are indirect costs. Indirect costs are allocated not based on number of days, of course, but typically on square footage, right? So you measure the size of the home office versus the size of the entire home, and that becomes your ratio by which to allocate expenses. You stack them into tier 1, 2, and 3, just like you did before. Tier 1 direct plus interest and property taxes, treated the same, can create a loss, etc., etc. Tier 3 is depreciation. Tier 2 is everything else. And again, this can be limited by the net profits less business expenses that aren't your home office expense. So the square footage deduction under the simplified method says simply take your square feet and multiply it by $5 a square foot. And the maximum deduction under the simplified method is $1,500. So your home office can't be more than 300 square feet. So for example, if your home office was 200 square feet, in 2019, you take 200 multiplied by 5, you take a $1,000 home office deduction. Now, it still has the same income limit that the previous one does, but there's no depreciation expense to calculate, etc., etc. It's a much simpler method, and you can flip-flop back and forth. So in 1 year, you could use the actual, and the subsequent year, you could use the simplified method. So allocate costus operates a qualifying home office in her home. That office takes up 275 square feet. It's used exclusively for her business, so we're going to assume that it qualifies. Her entire home is 2,200 square feet. And unfortunately, Allie Kate earned only $1,400 of gross income from her business prior to deducting the home office deduction. Okay, so let's calculate Allie Kate's home office deduction using the typical method and the safe harbor method. So we would start by allocating each expense. So the total amounts are under the annual amount, and we're going to allocate those based on square foot. There's no tax court method versus IRS method. It's just based on square foot. So we would multiply 1,200 by 275 divided by 2,200, we get $150. We do the same for mortgage, interest, property taxes, etc., 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 until, of course, we get to depreciation, which once we add up all the other expenses, we realize, well, we don't have any more income left. What are we going to do? We can only deduct the remaining $100 because $1,400 of gross income less the $1,300 of other expenses only yields $100 for tier 3. The safe harbor is super easy, 275 times $5 or $1,375. That brings us to the end of video 14C and the end of module 2. Thanks for hanging in there. This is a tough one, like I said at the beginning. Get out there, try to chew off that homework, and get ready for the quiz. Thanks for watching.